We'll shift our focus to corporates then. KRBL is a stock we are keeping on our radar. Remember, yesterday the company delivered its numbers. The street was a bit disappointed because we did see a significant crack come by in the stock price today as well. It looks like the stock is under a bit of pressure, but I guess the other overbearing factor for KRBL will also be the fact that the sanctions on Iran are back. Why is this important for rice companies? Because Iran is one of the major consumers of Indian rice. Let's discuss that and more with Mr. Anup Gupta of KRBL. Mr. Gupta, good afternoon. Thank you for joining us. I'm going to talk about your numbers first. You know, the last few quarters have seen you post muted top-line growth. What's the reason for this? Specifically talking about this quarter, how have your volumes done and what is the average pricing?
You see, this quarter, if you talk quarter on quarter, there is a year on year, there is a dip of 4% as far as value is concerned. But we have posted a revenue of 881 crore compared to 914 crore.
Right.
As far as the branding segment is concerned, we are doing very well in the branding segment. This dip is due to some non-branded segments, and we are purposely, as per the management decision, we are slowing down the non-branded business and our branded business is going up. That is the reason why our EBITDA has gone from 20 to 24%.
Yeah, that's clearly visible in your margins as well. Like you said, it's gone to 24%. But how long will this pain in the top line growth continue? I understand that you're keeping your focus on the branded business. So what percentage of your sales is coming from the branded business?
It's about 92% is branded, 8% is around unbranded.
So if you are, so what was the growth that you witnessed in the branded part of the business?
We are expecting to 10 to 12% growth every year.
So from what year onward? Because, you know, the last year, of course, has seen revenues actually dip. And if you're saying 92% comes from branded, it clearly means that that part of the business has not been doing that well.
No, the point is in India today, the sale of branded and unbranded, the ratio is around 40% is branded and 60% is unbranded. I am looking at taking a pie of unbranded, which is a big and a huge market in India of 60%. I am making a point here that still in India, the ratio is 40 to 60. I think in next 2-3 years, this will be vice versa, where 60% would be branded and 40 would be unbranded. Last year, my market share in India was 32%, and I have increased my market share by 3% to 35% this year. So naturally, when the pie will increase from 40 to 60 and my ratio from 35 goes to 40, so I have a big share of cake in the branded market.
Well, yes, you definitely have improved your market share, like you said, you know, by 3 percentage points. But unfortunately, at least at this point of time, the top line still, like you mentioned, you know, just a single digit dip is what we are seeing. So for FY19...
if you compare with last year, the turnover was... The ratio from branded to unbranded was quite huge. It was 80% branded, 20 unbranded. And that 12% business, we have forgone that business. In fact, if you see the top line, the branded segment we have increased. That is the reason why our EBITDA has increased.
Understood. So going forward as well, naturally your focus will be on the branded business. You're also going to be, of course, gaining market share from the unorganized players as well. Just a quick question on the sanctions imposed by the US on Iran. Would you believe that this would impact you? Because Iran is, of course, a key consumer of Indian rice.
You see, India exports around 4 billion ton of basmati rice, out of which around 900,000 ton is Iran, which is around more than about 23%. But you see, last 5 years, there are always sanctions on Iran, but basmati rice, staple and essential food, it doesn't have any impact on these sanctions. Since rice is a food item and it is categorized as an essential grocery item, it does not have any impact on the sanctions.
Clarification that we really needed, because seeing that one of the biggest import items, or rather export items from India to Iran is rice, it would certainly have an impact. So thanks so much, Mr. Gupta, for clarifying that. For now, of course, rice being an essential commodity may not be touched by the sanctions. That, of course, is the view coming in from Mr. Gupta. And of course, he's also explained what exactly has led to that weakness in the top line. But going forward, as the focus on branded improves, the numbers as well will improve. Quick break right here on the show. Come back for more.